Just revisit what the GIFT Nifty is currently at and what the implied open for the index is telling us this morning. 65 points higher, and we're comfortably now nudging the 24,100 mark for the GIFT Nifty once again. Kunal is here in the studios. Let's ask him about what he's making of the market. Kunal, hi, good morning. Good to see the way markets eventually panned out yesterday. 24,000 conclusively conquered, and this after many days of very consolidation.
Yeah, I think excellent construct for the markets. When you see Brent crude back to that, pre-war or just at those kind of levels, 70, 72, and the setup in terms of tips being bought into for our markets, the global market correction which panned out for just one single day, no major follow through after that. So that construct for the markets is very, very positive. Yesterday's comeback was just brilliant for the markets, because in the sense you saw those traditional large cap names, the ones which have a direct correlation with respect to Nifty 50, banking, financial services, real estate, IT stocks, those classical names made a very strong and a solid comeback. And there was a point where day before yesterday, for the first time in the last 7 or 8 days, the market breadth had remained negative. But yesterday it came back in towards extremely positive in terms of the market breadth. So we are back to that construct for the markets, what we've been doing for the good part of the last couple of weeks. And hopefully, I think this should sustain. We are heading towards a breakout on the 24,200 mark on the technical front. This is one very important level to watch out for, because I would sense that with the comeback of these stronger sectors, the banking, etc., I think there could be now a strong possibility that the index can head towards 25,000 at least by the next couple of weeks.
Couple of weeks, 25,000?
Yeah.
So you mean 1,000 points from the current levels?
Yeah, 4% move on the index.
Wow. And what will lead us there?
So looking at the construct, banks, private sector banking names, that too I think is one of the major sectors to watch out for. Financial services, this is one very interesting space, because names like Bajaj Finance, L&T Finance, Shriram Finance, etc., these stocks were languishing into their own sideways trading range, more like a flatline move for these stocks, plus minus a minor trading range. But these stocks are now starting to show signs of a acceleration in terms of momentum. So that could probably be the other sector to watch out for. And we've seen financials to have a very high correlation vis-a-vis the similar sectors like private sector banking names with respect to the benchmark Nifty. So, this could also have a very strong positive effect on the benchmark analysis. So that's what I would believe that one should probably place their bets on.
Kunal, we saw the index close about 24,000 yesterday. If you look at the open interest positions for the index, Nifty alone, there is somewhere around 37,000 crores of open interest position for Nifty 50 in the June series and 14,000 crores in the July series. There are only 2 days left for the expiry to happen. Do you see a good short covering rally coming in the next 2 to 3 days?
I sense so. I sense this time around that there should be a good short covering, because after that volatility 2 days back for the markets, it was more of a settled day for the indices yesterday. More importantly, when you see those large cap names making a comeback, there is a run for covering our short positions. And when you see those underperforming sectors, you look at, for example, the last 3-4 months, the 3 or 4 major underperforming sectors were real estate, there were private sector banking names, and then the ITs as well as the pharma index. Pharma has made a very good comeback. Real estate indices are up 30% broadly from their March lows. Private sector banking stocks are up 15% or 20% so far, except for HDFC Bank. So when you see 3 out of the 4 sectors which were underperforming making a comeback, and when the IT stocks also stop falling as such, there's bound to be a point where the shorts will go in for covering of positions. And when you have the across the data points, crude down to 72, dollar index, still trading at 101 levels, not rising viciously above those levels. Global commodity prices, in fact, yesterday I was looking at the rubber prices, that was down some 6-7%. Gold, silver, back to their, I think, sub 4,000 and sub $60. So that global construct is bound to have a positive effect on equities.
And what are the picks for today?
So I'm continuing with the bullish call on trend. We flagged off this stock yesterday morning also. Looks extremely attractive as a setup. The stock heading towards a classical breakout and a multi-leg breakout for the stock. It started off on the daily charts, and now it's trickled onto the weekly charts in terms of indicators rising above their neutral territory for trend. So we'll look out for higher targets of 3,350, stop loss to be kept at 3,200. The second would be a buy on L&T Finance. Now, this could be an interesting pick, because most of the financial services names are exhibiting a very similar kind of a swing pattern or a flag pattern breakout on their daily charts. So we'll look at 312 as a target for L&T Finance, stop loss at 284.
Well, those are the picks. I'm very curious to know whether FIs start to come back, because if private sector banks